Good afternoon, everyone. I welcome you all. Good afternoon, namaskar, sat sri akal, vanakkam. So, I'm C. Ankit Sharma, your income tax faculty for today's session. Today will be the last session of our class. So, we will complete our unit number 9, that is calculation of tax and total income and optimization of tax also. So we have covered the theoretical provision, which was in this chapter in the last session. And I also discussed with you that there are only two new topics in this chapter, that was AMT and drafting a specific salary structure on the basis of exemption and perquisite, which will increase your cash inflow to the maximization. Everything else was already those topics, those we have already covered in our last sessions, whether it's connected with basic concept, rate of taxes, PGBP, capital gain, etc., etc. So I believe that you must be studying very hard to achieve your goal, that is to be a chartered accountant as soon as possible. So today we will cover test your knowledge 12 questions will be there, and we will solve each and every question one by one. There are two mistakes also in those questions, so I will let you know what were those mistakes, and you have to correct those errors in the study material also. That is, one is question number, I guess, 7, or I guess that was one in question number. One is in question number 12, and one is in question number 7. Yes. So there are two errors in question number 7 and question number 12. So I will rectify those error also, which is in study material. It happens sometimes, some clerical mistakes sort of. And also there was other things which we are going to cover one by one. So Nitin, good afternoon. Pallavi, good afternoon. Vishmita, Vaidehi, Bhumika, Neeru, Manvi, Nayan, Hardik, Nancy, Ragini, B. Sai Kiran. Very good afternoon to all of you. So before starting the class, of course, the thought for the day for all of you. And let me tell you, it's like we can say that the summary of every thought, what we have discussed in from so many lectures, this I can say that this is the summary of all those thought for the day in one sentence, and it says, if it is important to you, you will find a way, and if not, you will find an excuse. So that is exactly the summary of all the thoughts we have discussed in last sessions. Every thought is actually connected with this, because you will find definitely a way in whatever thing you have interest. You definitely find a way to do that thing, and you can see that thing. If you're interested in dance, you will find a way to dance. If you're interested in study, you will find a way to study. And if you are not interested in something, definitely you will find an excuse for that. If you are not interested in studying, you will find an excuse that आज मन नहीं है, या फिर आज मूड नहीं है, या फिर आज बहुत difficult है, कल पढ़ लेंगे, etc. So this is technically the summary of all the thought for the day, that if you are interested to become a chartered accountant, you will find a way to study, to work hard, etc. You will manage your priorities, you will manage to sacrifice your party, etc. You will do something to be a chartered accountant in any way. And if you are not interested to become a chartered accountant, if you are not interested that to study, you will definitely going to find an excuse, and you will cover yourself with that excuse that is बार paper बहुत difficult आए थे, इसीलिए group नहीं निकला, etc., etc. So please, if you want to become a chartered accountant, you are definitely going to find a way, and you should find a way. Okay, so stop making excuses for all those things. That is important for your life. So after this, let's go for the questions part. So we are discussing test your knowledge question, and definitely the test your knowledge question is just like a revision of all the topics, whether it's deductions, whether it's set of provision, whether there are certain exemptions, salary provision, house property, PGBP, etc., etc. So one by one, we will discuss all these questions. And as I told you, the error we need to rectify in two questions of test your knowledge. There are 12 test knowledge questions, and I have solved myself each and every question. So this is question number 1. And question number 1 relates to marginal relief provision. You should have a pen, paper, and calculator with yourself to understand the calculation also. I have also asked you that please go through with the provision of calculation of rate of tax, margin relief, surcharge provisions, capital gain rates, and PGBP. So the question asked, and the first thing you have to find it out in these kind of question or in any numerical question, that what is the requirement of the question. So the question asks you to compute the tax liability of Mr. Gupta, age 61 year, under default tax regime, having total income of 1 crore 2 lakh rupees for assessment year 25-26. Assume that his income comprises of salary, income from house property, and interest on FDs. So that means the question wants to explain you that there is no income from special rate category income. So this is going to be taxed as per slab rate. But because you can see now, we have to calculate tax under default tax regime. And of course, whenever there is an income which has been given in question, and if it's slightly exceeding those limit, after which surcharge need to be applicable. So you have to always apply marginal relief concept on that. So there is limit of 50 lakh, then 1 crore, then 2 crore, and then 5 crore. So your any income has been given slightly over these limits. So you have to kept in your mind that I have to apply marginally concept also. So because you can see now the income is 1 crore 2 lakh rupees. So definitely we are going to solve this question as per the marginal relief provisions under default tax regime. Okay, so we have discussed these kind of question in basic concept chapter number 1. So let me solve question for you. Good afternoon, Anurag, Kasak, Neha, Malu, Nitin Prajapati. Yes, correct. So I've also asked you in capital gain chapter that whenever you solve an income tax question, you have to follow a certain format. Mr. Iswara P, good afternoon to you also. So you have to always write it down computation of. So how that format should be, you can see the solution part of your study material question. So you have to write it down that specific format for calculation of tax or capital gain or PGBP, etc. So we are solving question for the tax liability. So computation of tax liability of Mr. Gupta, I guess, for assessment year 2025 and 26. Clear? So this is under default tax regime. So we have to apply the rate of tax and the provision as per default tax regime. And because the total income has been given in question is 1 crore 2 lakh rupees. So we have to apply the marginal relief concept also. Now under marginal relief, the first step, we have to calculate the total income that is given in question, and we have to calculate tax on their own. So we have to prepare two columns. In the first column, we will write it down the income which has been given in the question. Exactly this kind of format I have discussed with you in our basic concept chapter. So the income has been given in question number 1 is 1 crore 2 lakh rupees. So as per default tax regime, if we calculate tax on it without surcharge and education cess, how much will be the tax thereon? Please calculate and let me know. Otherwise, I will calculate for all of you. So what should be the tax amount upon 1 crore 2 lakh rupees income? Whether he is saying 27 lakh 50,000, Harding is exactly giving the same answer. So there is basic exemption limit of 3 lakh rupees. Then for next 4 lakh rupees, 5%. So on up to 15 lakh, it would be 1 lakh 40,000. And over 15 lakh rupees, we have to apply rate of 30%. So if you will do this, the tax would be, of course, 27 lakh 50,000 rupees. Clear? Now, whether surcharge is going to be applicable, I have asked you to always apply the format like this: tax less rebate. Now, rebate would not be applicable because it is exceeding 7 lakh rupees. But you follow this format, so you would be able to apply rebate provision when there is going to be applicable. It will not be going to be missed out by you. In any case, if you follow this format, then the surcharge concept would be there. Whether surcharge would be applicable or not, Pallavi is saying 10%. No, Pallavi, you have to see the total income and then revise the provision of surcharge. It would not be 10%. Surcharge would be nil up to 50 lakh. From 50 lakh till 1 CR, it would be 10%. And if it is more than 1 CR, the surcharge rate would be 15%. Correct, Hardik? So 15% surcharge, that would be 4 lakh 12,500 rupees. Clear? So total tax and surcharge would be 3162,500. Now education cess would be applicable always at last after calculation of tax. Then we apply the education cess concept, education and health education cess. Okay. So cess would be 4%, but that need to be applicable after the calculation of marginal yield. So that would be the tax and surcharge if the income is 1 crore 2 lakh rupees. Now, step number 2 is fixed. You have to write it down, that amount of income up to which there would not be any surcharge or the rate of surcharge has been changed. So before 1 crore 2 lakh rupees, the limit is 1 crore till which the surcharge rate was different. So what should be the tax if the income is 1 crore rupees? The tax would be 269,000. And now surcharge would be 10% in this scenario. So that would be 2,69,000 rupees. Now the total tax after surcharge up to if income is 1 crore rupees, that would be 2,959,000. So now you can see we have calculated the surcharge, we have calculated the tax upon income of 1 crore rupees. Now the third step to find out the difference. And this third step will tell us that whether marginally concept would be applicable or not. So difference of income that is exceeding by 2 lakh rupees. And due to this difference, the tax liability has been increased by 2,03,500 rupees. So whether there would be marginal relief or not, give your answers. There would be marginal relief or not. Of course, because when tax is more than income, or we can say when difference of income is less than the difference of tax. So if this is higher and this is lower, there would be marginal relief. How marginal need to be calculated? The difference between these two would be the marginal relief. So out of 2,03,500, if I will reduce 2 lakh rupees of increment, the marginal relief would be 3,500 rupees. Clear? And what we will do with this marginal relief, this is going to be allowed as a discount. It is going to be allowed as a discount out of the tax liability which has been calculated on that income which has been given in the question. So that means from 31,62,500, there would be marginal relief as a discount of 3,500. So my tax liability would be 3,159,000 and cess would be 4% upon this. That would be 126,360. Total of tax and cess, the final tax liability would be 328,530. That would be my total tax liability answer. I hope you all got this because it's simple question and this is technically a basic concept chapter question, not the calculation of total income and tax liability question. So this is just for a revision that you will understand the provision of applying surcharge and cess and marginal relief and applicability of slab rate on the calculation of your total income. Generally, this chapter will include those kind of question in which we have to calculate total income as well as tax thereon. Okay. So now moving on to second question. Now you will see the question says that Miss Charlie, an American national, and when you read this kind of scenario that there is some nationality topic or citizenship topic is there. So there could be a question in which you have to also find out residential status of that person. So Miss Charlie, an American national, that means American citizen. Clear? So she is not an Indian citizen. Got married to Mr. Radhe of India in USA. So marriage took place in USA on 2nd of March 2024. Now the question says, and came to India for the first time on 16th of March 2024. Okay. She left for USA on 19 September 2024. She returned to India again on 27th March 2025. While in India, she had purchased a showroom in Mumbai on 30th April 2024, which was leased out to a company on a rent of 25,000 per month rupees. From 1st May 2024, it has been let out from 1st May 24. She had taken loan from a bank for purchase of this showroom on which bank had charged interest of 97,500 up to 31st March 2025. So till now, you must have understood that this question having some provision regarding residential status and the calculation of income is related to till now is for income from house property. Now she had also received the following cash gift. So that means income from other source gift provisions also applicable during 2024 and 25. So what she received? She received gift 51,000 from parents of husband. That means from her father-in-law and mother-in-law. From married sister of husband, that means sister-in-law, also gave her some gift. From two very close friends of her husband, and they have paid 1,50,000 and 21,000 rupees of gift to Miss Charlie. Now she is Mrs. Charlie, okay? So determine her residential status. So the requirement of question is first is to find out the residential status. Then compute the total income chargeable to tax. So second thing is we have to calculate the total income chargeable to tax along with the amount of tax liability. So the tax liability need to be find out for assessment year 25-26 if she opt out of the default tax regime. So we have four information has been given that she is out of the default tax regime. You have to find out her residential status, NTI, and the final tax liability on the basis of information given above. Clear? Now point number B also has been there, and it is saying that what her residential status would her residential status undergo any changes? Matlab, whatever residential status you are finding on point number A, is it going to be changed assuming that she is a person of Indian origin and her total income from Indian sources is 18 lakh rupees and she is not liable to tax in USA. So what would be your answer if the condition number B is there? So we have to find it out. So one by one, first of all, we will solve point number A and then we will move on to point number B. Clear? So first of all, we have to find out the residential status of Mrs. Charlie. So you will see she was an American national. So first of all, we have to see for how many days she was in India in previous year 24-25. So question says that she was an American national, Mrs. Charlie, If somebody is not an Indian citizen and not a person of Indian origin, then she cannot avail the benefit of special condition. So that means if she is an American citizen, so in that scenario, both condition would be applicable on her, and if she is able to satisfy any of these conditions, she would be called a resident in India. The condition one is more than equal to 182 days in previous year, that means 24-25. So either she need to fulfill this condition, or she is equal to more than 60 days in previous year 24-25, and more than equal to 365 days in four preceding previous year in India. Clear? The other special condition for any person who is coming India for visit, etc., is for person of Indian origin, or for that person who is a citizen of India. So she does not fall in those category because she is an American citizen. No information regarding that she is a person of Indian origin has been given in the question. So according to this, if we now solve the question, so she came to India on 16th of March 24, and that is for previous year 23-24. So for previous year 23-24, she was in India only for from 16th March till 31st of March. So the day she is coming into India is also going to be considered. So 16, 17, 18, 19, 20. So total days in India up to 31st March would be 16 days in previous year 23-24. But we have to find out first of all how much days she stay in India in previous year 24-25. So she came on India on 16th of March. So from 1st April, she was in India full 30 days of April, then for 31st day of May, then June, then July, then August. And she was in India till 19th of September. She was in India. Then she went outside India and again came back on 27th March 2025. So for these 5 days of March 25, also she was in India. So if we aggregate all these days, she would be in India for 177 days in previous year 24-25. Now we have to see, is this satisfying any condition as given in the above conditions? So she is in India for 177 days, so does not satisfy this condition. She was in India in 177 days, so satisfied more than 60 days condition in previous year 24-25, but she is only in India for 16 days in four preceding previous year. So that means she does not satisfy even condition number two. So if somebody does not satisfy any condition and the special cases does not applicable on that person, so she would be called a non-resident in India. I hope it's clear till now. So she is a non-resident. Now, on behalf of non-resident, why we need to find it out the residential status? Because for the person who is a non-resident, only two kind of income is going to be taxed in India. That is, income arises or deemed to arise in India, or we can say earn in India or deemed to earn in India. And which second kind of income is going to be taxed under income tax for non-resident? Who will tell? So the second condition is first was arise or deemed to arise. The second is received or deemed to received. Hardik, not only received. Whether you are also writing received, that is not the correct answer. Received or deemed to be received. Abhishek is saying 15 लाख से ज्यादा इनकम है अगर इंडिया में तो उसके लिए उससे पहले पर्सन ऑफ इंडियन ओरिजिन होना चाहिए. इफ दैट इज नॉट अ पर्सन ऑफ इंडियन ओरिजिन देन एक्सीडिंग 15 लाख प्रोविजन डज नॉट एप्लीकेबल. So Dilip is writing correct, received or deemed to be received. So only two kind of income is taxable, that is arise or deemed to be arise, or received or deemed to be received. So now on the basis of question, if we will see that she earned rental income from 1st May. So we will calculate income from house property. So rental income was from 1st May 2024, 25,000 rupees per month. So for 11 months, the income would be 2,75,000. That would be my GAV and of course AV. Then we will deduct the deduction of 30%. No municipal taxes has been given in the question. So 30% statutory or standard deduction would be there, 82,500. My balance value is this, and now the interest which has been paid to the bank, that was 97,500 rupees. So income from house property would be 95,000 rupees in this case. Now income from other source, that is gift from father-in-law, would be exempted, gift from sister-in-law would be exempted, but gift from friend, that was 1,51,000 and 21,000. So aggregate is exceeding 50,000. In case of monetary gift is going to be full taxable under income from other source. So 1,72,000 would be the income from other source in this scenario. After adding both, the GTI would be 2,67,000, and that would remain my total income. That is going to be 2,67,000. Now please calculate tax upon this. Let me see. You able to calculate the final tax liability, you have to calculate it. Calculate the tax and let me know what is the exact tax liability in this case. Okay, so letting out of shop, if that is in the nature of business, that if that is your main activity of income, if the frequency of that kind of is like that, that only you can include under PGBP head. So it will depend upon case to case basis. And for that, you have to read the income from house property provision also. It is a single property which has been let out. So it's not mandatory that always that is going to be taxed as PGBP. If it is a single property, we can tax it as income from house property also. Okay, so Dilip is saying tax liability nil. Tambeshwari is saying 850. Pallavi also saying nil. Nayan Partipal is saying rebate 850 rupees. She's a non-resident, so she would not get any rebate. First of all, understand that provision. Okay. Now Hardik is saying 884 and no rebate under section 87 as she is a non-resident. I have told you that please round off the tax in the multiple of 10 rupees. So 884 would be the wrong answer. The correct answer would be 880, not 884. Manvi, round off to the nearest of multiple of 10 rupees. So it would not be 850, it would be 880. So you have to apply the education cess and the health cess also on the tax. Rebate would not be applicable. Okay. So that is very important. If you will provide rebate, the answer would be wrong. So total income would be 2,67,000. Basic exemption limit 250 would be there. So you have to calculate tax on the balance amount of 17,000 at the rate of 5%. That would be 850. So rebate would not be applicable, surcharge would not be applicable, but cess will always be there. That would be 34 rupees. So 884, but we have to round it out. So that would be 880 rupees. So the correct tax answer would be 880 rupees. I hope it is clear. Now part 2 says, would her residential status undergo any change, assuming that she is a person of Indian origin and her total income from Indian source is 18 lakh and she is not liable to tax in USA. So you can go through with the point number B answer. Answer generally would remain same. There would not be any change in tax liability, but you should go through yourself with the point number B answer. Clear? Now question number 3 is very important. Doctor, Niranjana, a resident individual aged 60 years, is running a clinic in Surat. Her income and expenditure account for the March 31st, 2025 is, so expenditure income has been given in question, consultation and medical charge, medicine consumed, income tax, etc. So that would be a kind of question what I expect to be asked in the examination from this chapter, in which you have to calculate the total income as well as the tax liability, and that must be related to the majority part of the PGBP provision, as you can see in this question. So in this question, the PGBP provision we have to solve. Then there is rent paid, etc. provision has been given. So we have to first of all find out the provisions of PGBP to calculate the income chargeable to tax as PGBP. But before that, we have to see what is the requirement of question. Now the question say, from the above compute the total income of Dr. Srimati Niranjana for the assessment year 25-26 under default tax regime and optional tax regime as per the normal provision of that. So we have to calculate tax under both regime. Clear? So we have to calculate the total income only. The good thing is we need not to calculate the tax because they are saying compute the total income under default tax regime and optional tax regime. So we just need to calculate the total income. There is no liability to calculate the tax upon these. Under both regime, we have to find it out the total income only. So here is the question. We will solve it one by one. So first of all, the PGBP part need to be solved. The net profit has been given in question, and that is 4,40,400. Clear? Always started from the income side. Consultation charges would be the part of his business, her business income. So the age is also, you should, age is 60 years. So that would be the part of PGBP. Income tax refund, principal amount 5,000, interest is 450. So we received 5,450 as an income tax refund. That could not be the part of our business income, so we need to reduce it. Then dividend from units of UTI, that would be my income from other source. Again, same. The interest portion of this also would be part of my other source income. So dividend from UTI gross. What is the meaning of gross? Why it has been written gross? Gross means TDS has not been deducted. If that has been written over here net, that means TDS has been deducted. So we have to include gross income under income from other source. Under PGBP, we just need to reduce whatever have been write it down in this column. So 10,500 also going to be reduced from PGBP income. Winning from game show, that is net of TDS. So that means TDS of 15,000 has been deducted. After that, the income received is 35,000. So if I need to find out the gross income of winning from lottery, that needs to be 50,000. So how much I need to deduct from here? 50,000 or 35,000? Let me see. How much amount we need to deduct from here? 35,000 or 50,000? Hardik is saying 35,000. Whether he's saying 35, Harshpreet Kaur is saying 50,000. Okay, very bad. It would not be 50,000. I told you, if including in PGBP is only 35,000, how can we reduce 50,000? We cannot reduce more than 35,000. We will include 50,000 under income from other source. But from PGBP, we can only reduce that amount which has been included, whether including TDS or after excluding TDS. So 35,000 need to be reduced from it also. Clear? Then we are having rental income. So rent should be the part of income from other sources. This is going to be again income from other source. This is the part of income from house property. Sorry, rent is income from house property. So that is also going to be reduced from my PGBP income. So that was my income part, which has been solved. Now coming on to the debit provision or the expenditure part. So medication consumed would be the part of expenditure of my business. Staff salary, clinical consumables, rent paid, etc. would always going to be the part of my PGBP. Administrative expenses, again part of my PGBP. We are solving total income initially under default tax regime. First of all, we are calculating total income under default tax regime. I am not solving this part on the separate sheet because I want to show you that what provision we are solving. Fine. So the amount paid to Scientific Research Association under approved under section 35. What should I do with this? Under default tax regime, where there is any specific provision regarding the expenditure on scientific research or not? Under default tax regime, whether 1,50,000 going to be allowed or not allowed, whether he's saying add back, okay, Hardik is saying disallowed, correct? Vishmita also saying correct. Dilip is saying yes. So this is disallowed. The scientific research expenditure are disallowed under default tax regime. So we have to add it back. That means 1,50,000 need to add back under default tax regime total income calculation of PGBP. Clear? So after this, now we move on to the provision which is connected to additional information. So rent paid includes 30,000 paid by check toward rent for her residential house in Surat. So that is the residential house in Surat for which 30,000 has been paid. So that means we cannot claim that under PGBP because it's a personal expenditure. So 30,000 need to be add back. Okay, is there any other provision in which we can claim this as an expenditure, students? There's any other case, any other provision in which we can claim this 30,000 rupees as an expenditure? Kasak is saying HRA. How it is possible, Kasak? HRA is for salaried person. So how can we claim that? Whether he's saying section 30, Vishmita saying office rent. How can we claim residential house rent under office rent, Vishmita? Not possible. Hardik, I have read your answer. Do not send it repetitively. I just want to see that other having some knowledge to get the benefit of this expenditure or not. If I'll write, I will say that your answer is correct, then other will also going to write it down the same answer. So I want to know anyone of you know where we can claim that again. Vijay Kumar sir is saying 80 double G. Nayan Patel is saying 80 double G. Hardik was again saying 80 double G. Correct. So there is section 80 double G, which can give you the benefit of rent paid for your residential purpose. But I'm just asking you whether it is applicable in this case or not. Because under default tax regime, no reduction would be there. But under optional tax regime, we will see, can this deduction be claimed under the solution of optional tax regime or not? Okay. So for the time being, under PGBP, this could not be allowed. Now, clinical equipments value have been given for the purpose of calculation of depreciation. And you can see the clinical equipments are opening WDV has been given 5 lakh rupees, and the asset acquired on 7 December via check. That means less than 180 days. So on this, we will claim 15% depreciation, and on this, we will claim 7.5% depreciation. So it would be 75,000 and 15,000. The depreciation would be 75,000 and 15,000. Now, rent received relates to residential house property situated in Surat. So she is also having a house in Surat from which she is receiving rent. Gross annual value 27,000. The municipal tax of 2,000 paid in December 24 has been included in administrative expenditure. So municipal tax should be claimed under income from house property. But 2,000 has been claimed under PGBP. So what we are going to do, we are going to add it back. 2,000 rupees municipal tax need to be added back. So that is my PGBP. No other information. Like she has received a salary, that would be the part of my salary income. She has taken an education loan, that would be the part of deduction. Tuition fee she paid, that is also going to be the part of my deduction topic. Then the amount of 28,000, that is for again deduction part. So all the PGBP calculation we have already made, and now the PGBP under default tax regime would be this value, 454450. This is my PGBP. Now moving on to the other sheet. So we will solve it in detail over there. So under question number 3, under default tax regime, my PGBP income would be 454450. Now salary income, the question says she's getting salary of 90,000 rupees. And the standard deduction would be under default tax regime 75,000. Under normal optional tax regime, the salary deduction is 50,000, but under default tax regime, it's 75,000. So the income under the hat salary would be 15,000. Suppose this is my A income, this is my B income. Now we are having income from house property also. So the rent received was 27,000. Municipal tax paid was 2,000. So my annual value of 25,000. The deduction of 30% would be 7,500. And my income from house property would be 17,500. That would be my C income. Now income from other source also there, in which there was interest on income tax refund that we have reduced from business income 450. Dividend gross value has been given 10,500. And the casual income. Now here we will include the gross casual income after inclusion of TDS, which has been deducted under PGBP. So that would be 50,000. So my total income from other source would be 60,950. That would be, say, D part. So now if the GTI we need to calculate, that is A plus B plus C plus D, that would be 5,479,000. Lot of deductions are there, but cannot claim under default tax regime. That would be nil deductions. So this would be my total income under default tax regime, 5,47,900. Now the same question, we have to calculate total income under optional tax regime. So majority of things will remain the same. Optional tax regime, or as per the normal tax provision, we will take the GTI as per default tax regime and make adjustment in that. So that would be 547900. The first adjustment is for scientific research expenditure, which is not allowed under default tax regime. What we have added back. So we have to reduce the scientific research expenditure under section 35 because that is allowed under normal tax regime or optional tax regime, 1,50,000. The standard deduction for salary is only 50,000 under optional tax regime, which is 75,000 under default tax regime. So 25,000 extra deduction need to be added back. So my total income would be, in case of optional tax regime, would be 4,22,900 rupees. Now talking about the deduction, we are having multiple deduction in this case. Deductions for tuition fees. Under section 80C, that would be 1 lakh. Deduction section 80D for medical insurance, the eligibility would be 28,000. And 80E, why it's 28,000 allowed? Because she's a senior citizen. So in normal case, it's 25,000, but for senior citizen, that would be 50,000 up to. The 80E, that is for education loan, would be 55,000. Total deductions are 1,83,000, and the TI would be 239900. Now there was a rent paid of 30,000 also in that question. What we have discussed, that we cannot claim it under default tax regime. Can we claim this rent deduction under section 80GG or not? For which we have to find it out. Three amount. One is fixed limit of 5,000 per month. Then there is, I guess, rent paid minus 10% of adjusted total income. And I guess last is 25% adjusted total income. So can we claim or not? If no, then why? And if yes, then I'm going to calculate this for you. Vishmita is saying no, she has own house. Exactly correct. In this question, it has been given that she is also having a house in Surat. So if you are having a residential house in Surat, you cannot claim the benefit of 80GG deduction. Exactly. So we cannot claim 80GG, not even under default tax regime because that is not applicable, but not even optional tax regime. Why? Because she is also having house in Surat. So if she does not have a house in Surat, then we can calculate deduction under section 80GG in this situation also. Clear? And you will see that in the solution, everything has been mentioned. The solution part is after the question. So when you go through with the solution of question number 3, which has been mentioned after this question part, so there is a note which has been there and it says she cannot claim 80GG as she is also already having a house in Surat. So that was question number 3. Now question number 4. Before question number 4, someone asked me in the last session that, sir, what will happen if there 80G and double G, both deductions have been given in that question? I guess who asked that question in the last session? I guess Hardik, you asked. Okay, yes. So what exactly Hardik was asking, first of all, let me tell you, because we were discussing 80GG, so I just recall that. So Hardik was saying like this, suppose what happened, suppose there is Mr. A, suppose his GTI is 5 lakh and he had paid donation which is related to a qualifying limit donation, not the fixed one, the qualifying limit of 100% or 50%. Clear? Suppose the donation has been paid 40,000 and he also paid rent for residential purpose. He does not have any house in the same city and he paid rent, suppose 6,000 per month. Now, under optional tax regime, when you will go for calculation of total income in this scenario, what will happen? You will write it down the GTI, and out of that GTI, you will go for donation deduction, which is in section 80G. And because this relates to the qualifying amount donation limit, so there would be a problem in which for the purpose of 80G, you have to calculate adjusted GTI, adjusted gross total income or adjusted total income. So what will happen for the calculation of that? The formula said the GTI, and you need to reduce all deduction except 80G, because we have to calculate it. So you first of all, you go and reduce all the other deduction which is applicable in this case, and the short-term capital gain under section 111A and 112A and 112, etc., that you must have gone through with the definition of adjusted total income under deduction topic. So when we need to calculate the deduction under section 80G, the adjusted total income or adjusted gross total income provision will say go and reduce all other deduction first. And because we also paid rent, so there would be 80 double G applicability. So first of all, we have to go and calculate 80 double G, and we need to reduce 80 double G, all deduction except 80G. That means we have to reduce 80 double G first to calculate adjusted GTI, and then we will be able to calculate the 80G deduction. So now what will happen if you will go to calculate 80 double G provisions? Now 80 double G is saying 5,000 per month. And second part is saying rent paid minus 10% of, again, adjusted total income. Adjusted gross total income. And now for the calculation of adjusted gross total income for the purpose of 80 double G, it will again say the same thing. That take the GTI, reduce all other deduction except 80 double G. So it is saying first of all deduct 80G and reduce long-term gain 112A, 11, etc. So this section will say first of all reduce 80G, then come to me. And it will go to the 80G deduction. It will say first reduce 80 double G, then come to me. So how it would be able to solve? So I have told in the last session also, this would be a very difficult, complicated solution. So the study material also does not discuss about it. So they just skip this topic, because if that will be in question, examination or in question, that would be really difficult to solve. So that might be able to be solved at final level. But because Hardik was asking me that, sir, how we need to solve this kind of questions. So for solving this question, we have to assume deduction, any deduction as equivalent to X or Y, like in equations. So he just asked me this, sir, please show us a question that if it needs to be solved, so how it is going to be solved. So I'm just showing you a question which has been solved in that manner. I am not going to solve it for you, but I'm just presenting the solution part for you. I will upload it also. So if any one of you want to understand the type of calculation we need to solve these kind of questions for your knowledge purpose only, you can go through it. I will just discuss normally. So here is the question. You can see that. Suppose Mrs. Prerna Kishore has following information for previous year. PGBP suppose only 30,000. Bank interest 2,000. Medical insurance premium 4,000. House rent paid 5,400. Donation to churches 6,000. So this would be qualifying limit 80G. This would be a part of 80 double G. Suppose this bank interest, we remove it from here. That is income from other sources, not bank interest. So now how we will solve it? 30,000 would be your PGBP, 2,000 income from other source, not a bank interest. Okay, 32,000 would be your GTI. Now 80D can be claimed 4,000 directly. Now 80G and 80 double G, how we calculated it? That's the main part. So calculation of 80G and double G would be as under. First of all, suppose we assume 80 double G as X. So if 80 double G is X, then adjusted GTI would be GTI minus all other deduction. Minus deduction, this is 80D and 80 double G we assume as X. So minus 4000 plus X, that would be equation. So adjusted GTI would be 28,000 minus X. Now qualifying amount would be 10% of 28,000 minus X or actual donation, whichever is lower. So actual donation was 6,000. 10% of adjusted GTI, that would be 2800, 0.10x. This is 0.10x or 6,000. So of course, the lower would be this value because this is 6,000. This is 2800 minus 0.10x. So whatever you will reduce, the lower value would be this. So this would be my lower value. So deduction would be 50% of qualifying limit in this case. So that would be 2800 0.10x. So my deduction under 80G would be 1400 minus 0.05x. Now we will put the value of 80G in the formula of 80 double G deduction. 80 double G is 60,000 fixed. Then that is rent paid minus 10% of your adjusted GTI. So now adjusted GTI would be 2,666 plus 0.05x. That is 2740 minus 0.00 minus 0.005x. How that has been derived? It has been mentioned over here. So kindly go through with this. But let me tell you, for the purpose of examination, that would not be going to be asked in the question. After finding out the value of X, you can put the value of X in the deduction part and you will find out the deduction, how we need to drive it. That is only for your knowledge purpose, not for the purpose of examination. Okay. Back to our question part. Question number 3 we have solved. Now question number 4. It is again almost a kind of question which was like question number 3. So you can see Miss Purvi, age 55 year, is a chartered accountant in practice. She maintained her accounts on cash basis. Her income and expenditure account for the year ended on 31st March 2025 read as follows is, income has been given, of course, expenditure has been given. We have to calculate. First of all, we need to see that what is the requirement of question. You can see other information also given, and the question says, compute the total income and tax payable by Mrs. Purvi for assessment year 25-26 in a most beneficial manner. When this information, this language is in the question, then we have to calculate section 115 BAC tax. We have to calculate tax under optional tax regime. And if your adjusted total income exceeding 20 lakh or if AMT provisions are applicable, we have to calculate AMT tax also. Higher of these two would go further to compare with 115 BAC tax, and the lower would be your tax liability. So because the question asks you to calculate the tax in most beneficial manner, so maybe we need to apply the AMT provision also in this case. So question number 4 is there. I also solved that question, already solved that question. So let me solve this over here. So the net profit in the question, first of all, we are solving under default tax regime. The net profit under this question has been given 928,224. That is has been given over here. One by one, we will see what we need to reduce, etc. So fees earned, audit fees, taxation fees, consultancy would be the part of my PGBP. Again, dividend 10,524 need to be reduced. Then income from UTI gross need to be reduced. Then honorarium receipt from various institution for valuation of answer paper, that is also a part of income from other source, need to be reduced. Rent received, of course, going to be the part of income from house property, need to be reduced. Other three income as above need to be included under income from other source. Then the expenditure part is salary to staff, stipend to assistant, incentive to article, office rent, printing and stationery, meeting, purchase of car for official use. So this need to be add back because we need to reduce the depreciation of it, not the value of the car. Repair, maintenance and petrol of car, traveling expenditure. Again, the municipal taxes paid in respect of house property need to be added back. The other information say allowable rate of depreciation of car has been given 15%. Of course, value of benefit received from clients during the course of profession is 10,500. That would be the part of my business income. Incentive to article assistant represent amount paid to two articles for assistant for passing CA intermediate examination at first attempt. That would also be the part of my expenditure. No need to add it back. Repair and maintenance of car includes 2000 for the period of 1st October 24 till 30th March 2025. So because we are maintaining books of accounts on cash system of accounting, so whenever you pay it, you can claim that expenditure in that year. So whether it's even on or after 31st March 25, but you can claim it, there is no liability to add it back, etc. Salary includes 30,000 to a computer specialist in cash. So if you paid more than 10,000 rupees to a person on a single day, that is going to be disallowed. So this is going to be disallowed in our solution. The traveling expenditure includes expenditure incurred on foreign tour of 32,000, which was within the RBI norms, not an issue. Medical insurance premium on the health of dependent brother and major son dependent on her amounts to 5,000 and 10,000 respectively paid in cash. Now you can see this could be allowed as a deduction under section 80D, that is for medical insurance premium, and even that is under normal tax regime. But you will see the payment has been made on the health of dependent brother. So brother does not include in the definition of family. So this 5,000 cannot be claimed as a reduction under even normal tax regime. And for the major son dependent, the amount has been paid in cash, which is also not allowed. So in that situation also, whether even that is included in the definition of family, but you cannot claim the deduction because that has been paid in cash. National Savings Certificate deduction you can claim under section 80C. 70,000 advance tax she has paid. So that would, of course, going to affect the tax liability. At the time of calculation of tax, we can take the benefit of this tax paid as a credit. So here are the information. We have seen the basic calculation part. Now let me solve it for you in detail. So that was net profit. We have to reduce the dividend, which was 10524. Then the UTI income 7600. Then the honorarium received for checking of copies 15,800. The rental value, that is 85,600. Car purchase cannot be the expenditure. Yes, of course, the depreciation can be claimed, but the purchase value cannot be the part of our expenditure. Municipal taxes, that is 3,000, need to be added back. Depreciation on car at the rate of 15% going to be reduced. Benefits from clients which has been received need to be the part of my income, which has not been included earlier. So we need to include it. Repair of car would be allowed. Salary paid in cash more than 10,000. That is going to be add back full 30,000. So my PGBP income would be 9 2,200 in this case. Now, after PGBP, we have to calculate income from house property. That was 85,600 rent, municipal tax 3,000, that would be 82,600, 30% standard deduction, that would be 24,780. The balance would be 5,7,820. That was income from house property. Now, income from other source will include my dividend 10524, UTI income, that would be 7,600, and that royalty received for as an examiner of verification of copies, etc. So that would be 33,924. My GTI, the total of A plus B plus C, would be 1011944. Deduction would not be there. Total income would be 1011944. Now the tax liability on 10,11,944 under default tax regime, tax would be 5,351,791. No surcharge, no rebate. 4% cess would be 2,072. So tax would be 5,3,863. Advance tax has been paid 70,000. That's need to be reduced. And because dividend we have received gross, so there would be a TDS deduction already because it is exceeding the specified limit upon which TDS should be deducted. So TDS on dividend would have been already deducted 1052 at the rate of 10%. And on income of UTI also 10% must have been deducted earlier also. So the balance would be 17949 refund. In case of, if we solve it as per default tax regime. If we go for optional tax regime, the GTI would be 1011944. 80D insurance deduction would not be there, but NSC deduction for 80C would be there for 10,000 rupees. So that would be 1001944. If we calculate the tax upon it, it would be 113082. The 4% cess would be 4523. The total would be 117605. Advance tax, TDS after deducting those three, it would be 45,793. The refund, which will be rounded off to 45790. In the same case, that need to be rounded off 717,950. So the beneficial is this because we will have the refund of 45,790 rupees if we need to pay tax as per normal regime. You can see in this case, our ATI would not exceed 20 lakh rupees. So if we need to calculate tax as per AMT, you can see we will take the total income, which would be 1001944. There is no section 10AA. There is no section 35 AD. There is no deduction in section 80 RRB, 80 QQB, and 80. There were three deduction: 80 QQB, 80 RRB, and one more for patent of royalty, 80 JJAA. So because these deduction are also not there, so technically there is ATI would be only 1001944. It is less than 20 lakhs, so AMT provision does not applicable. So in this case, we have to opt that option in which either tax liability is minimum or refund is higher. So in both cases, there is a refund. So higher refund case need to be chosen. So the tax need to be paid by optional tax regime would be more beneficial to the assessor. Yes. So back to the questions. Now let me solve question for you. Question number 5 is very simple. You can solve it yourself. If we will have time, we will definitely going to solve it again. I am moving on to question number 7, in which you need to make a rectification, students. Kindly change this date of construction of the building. I have a talk with the BOS in the morning, and the solution need to be according to the question. So this date, kindly take it as 9798 against 2005-06. Kindly change the question and take this date as 1997-1998. Why we are doing this? Because according to this, we will claim maximum interest deduction that would not exceed 30,000 rupees. Okay. You will see in the solution why we have done it. Okay. So this question we need to solve. That is Mr. Rajiv, aged 50 years, a resident individual and practicing chartered accountant, furnish you the receipt and payment account for the financial year 2024 and 25. Now, because in this question you will see receipt and payment account has been given, not income and expenditure. So if income and expenditure has been given, then we need to take the net profit and we apply that format of allowed, disallowed, allowed, disallowed. But if the receipt and payment has been given in the question, then we have to make a new income and expenditure. We will just collect only those income which should fall under PGBP head and will deduct only those income which need to be allowed as deduction under PGBP head. So because receipt and payment account has been given, then we have to consider now only those income which need to be the part of PGBP and only consider those expenses which need to deduct under PGBP. So under normal question, we add or disallowed the disallowed expenditure or disallowed incomes. But if the receipt and payment is there, now we will only consider allowed income and allowed expenditure. So you must have gone through with this kind of provision under your PGBP head, that if receipt and payment is there, then you should follow the allowed income and allowed expenditure consideration format, not the disallowed one. Okay. So in this question, we will only take those receipts which would be the part of my PGBP and will only take those expenditure which would be the part of my PGBP. So those do not form part of my PGBP. We are going to ignore that. But before that, we have to see what is the requirement of question. The question asks, compute the total income of Mr. Rajiv for assessment year, assuming that he has shifted out of the default tax regime. The good thing, we need not to calculate the tax. We just need to calculate the total income under optional or normal provision of tax. So one by one, we will solve that. So you will see from the receipt side, opening cash balance is not the part of my PGBP. Fees from profession definitely going to be the part of my PGBP. Rent would be the part of my income from house property. Motor car loan from Canara Bank, the 9%. So loan would be the part of liability. It is not going to be the part of my income anyway. Yes, the interest could be the part of my expenditure, but this loan value is a part of liability, the part of my balance sheet, not the part of my income and expenditure. Salary of staff, etc. Of course, the part of income expenditure. Other administrative expenditure, yes. Office rent, yes. Housing loan repaid to SBI. So that is housing loan, not for the purpose of business. So that would have effect under income from house property, not under PGBP. Life insurance premium, 24,000. So that could be the part of deduction. Motor car acquired in January 2025 by account paid check. So depreciation would be the part of my expenditure. Medical insurance premium 18,000. Of course, the part of deduction. Books bought on 1st July 2024. Depreciation. Computer. Depreciation. Domestic drawing, of course, not is the part of my PGBP, not even the part of any deduction. Public Provident Fund subscription, of course, can be the part of deduction under Section 80C. Motor car maintenance, yes, it would be the part of my expenditure. Closing balance does not have any impact on anything. He occupies 50% of the building. Now, whatever the building he had, 50% is used for own residence. That means self-occupied. And balance is let out for residential purpose on a monthly rent of 5,000. So both 50% would be the part of self-occupied, again the part of income from house property, and this also the part of income from house property as let out property. The construction during the year 97, 98. Remove this 2005 and 6. Study will be amended later, but you need to change it over here. You should consider this as 1997-98 when the housing loan was taken. So we are assuming the housing loan has been taken in 97, 98 and the property has been purchased or constructed in that year. So due to this, because the loan has been taken before 1st April 1999, so that is the rule. If the loan has been before 1st April 1999, then in case of self-occupied property, the maximum deduction we can claim is 30,000. We cannot claim more than that in case of self-occupied property. Okay, we will see this in the solution part. Motor car was put to use both for official and personal purpose. 1/5 of the motor car is for personal purpose. No car loan interest was paid. So car loan interest has not been paid and we are following cash system of accounting. So interest would not be allowed as deduction in any way. 1/5 of motor car is for personal purpose. So all the motor car expenditure, which is for business purpose, would be 4/5. So we will only consider 4/5 percentage of motor car expenditure or depreciation under the part of PGBP. The WDV of other asset has been given in question for the purpose of calculating depreciation. Mr. Rajiv follows regularly the cash system of accounting. So that was the information in question on the basis of which we are going to solve the question. After this solution, we will go for a small break. So this is question number 7, PGBP income. We are considering only those income which should be the form of PGBP head and expenditure which should be the part of PGBP expenditure. So income, that is 59,38000. Salary would be the expenditure, of course, 215000. Administrative expenditure 1148,000. Rent paid 30,000. Depreciation on books. The rate is 40%, 8,000 rupees. Depreciation on computer. The rate is 40%, but it is less than 180 days, so that would be 6,000. Car. 4/5 of depreciation of car would be 4,25,000. The rate would be 7.5% because less than 180 days, and 4/5 of that also we can claim as business expenditure. That would be 25,500. Car maintenance was 10,000. We can claim only 4/5 of it, 8,000. Furniture depreciation at the rate of 10%, that would be 6,000. Plant and machinery depreciation at the rate of 15%, that would be 12,000. Other computer opening WDV was given 50,000. DAB would be 20,000. So my profit would be 2524,500. So that was my PGBP income. Now income from house property. self-occupied part and let out parts. For the purpose of self-occupied, the annual value would be nil. So rent has been given, sorry, interest has been given 88,000. Clear? 50% we can claim in this part, 50% we can claim in this part. So that means 44,000 interest could be claimed. But because we have changed the date, the problem is that in the study solution, the 30,000 has been considered. You can see if the date is 2005 and 6, if the date is 2005 and 6, so the interest should be allowed up to 2 lakh rupees. But what happened in the solution of study material, the maximum amount of interest has been taken at 30,000 rupees in illustration number, question number 7. So if we did not change the question, if we do not change the question date, if it would be 2005 and 6, then the solution part should be 44,000 should be here. Because if it is 2005-6, the loan has been taken on or after 1499, then the maximum interest which can be allowed could be 2 lakh rupees in case of self-occupied property case. So because if the date is 2005 and 6, so that would be allowed over 44,000 over here. But we do not want to change the solution. So we change the question. And so that we took the date before 1st April 2099. So now the 30,000 limit would be justified. Okay. So now we can claim maximum 30,000 over here. So this would be the loss 30,000. In case of let out property, the rent would be 60,000. 30% standard deduction. There is no municipal tax has been given 18,000 and the interest part is 44,000. So that would be loss of 2,000. Total loss of 32,000 in case of income from house property. So our GTI would be PGBP will set off the loss of 32,000 of income from house property after setting off losses of 32,000 of house property against PGBP, which is allowed under optional tax regime. My GTI would be now 2492500. Clear? Now deduction under section 80C for housing loan repayment, because 88,000 was the interest value, but the repayment was 1,88,000. So the principal amount can be allowed as deduction under section 80C. Housing loan repayment, life insurance policy payment has been made 24,000. PPF payment has been made 20,000. And 80D medical insurance premium is 18,000. So my total income would be 233,0500, and that would be the answer because we do not need to calculate the tax in this case. That was question number 7. Doubt, sir, in the receipt side. Hardik is asking, just a second, let me see the question, Hardik. As an income in the receipt side, rent as an income of 50,000 is there, then there could be a scenario of unrealized rent. Then, sir, why full 12 months rent has been taken in income from house property? Let me tell you why. Just wait. Let me show you. We are following cash system of accounting, Hardik. Cash system of accounting. So, cash system of accounting means the rent must have been received. Only that's why we are showing it in the receipt side, na? So how unrealized rent could be there if we are writing it down that rent was 50,000 rupees? That means it has been received. We are not making profit and loss account. So that could be a reason that could be rent receivable. But under cash system of accounting, if we are maintaining receipt and payment, that means we have already received 50,000 rupees. So why and how unrealized rent question could be arised in this case? Not possible, Hardik. Okay. So that was question number 7. So Mr. Bhargav, can we go for a short break of 10 minutes? Bhargav, can we continue? Okay. So welcome back, everyone. I believe you must have your tea, coffee, etc. So we were discussing test your knowledge questions, and that question number 7 we have discussed before this break. So is there any query regarding it? You can ask me. So today is our last session. We will discuss some more questions, which is from test your knowledge also. So after question number 7, now question number 8. Yes, 8 is from salary head, of course. So as today is our last class, I would like to sing a song for all of you. Who wants to listen that song? If there's anyone who wants to listen a song. Okay, Vishmita is saying yes. Only one student want to listen. Oh, Pallavi also want. Oh wow, Nitin is also want to listen a song. Anyone else? Manvi, Kameshwari, Neha. Wow. Anjali, wow, so many. Swati, I guess she did not ask any question till now, but she want to listen a song. Dinesh also want to listen. Sabha, Shibu. Now that's what I'm trying to say to you. As I said that I am going to sing a song, you all are so excited. Nitin is saying yes, sir, very excited. Why it is not for your sessions when I ask you that I am going to teach you tax liability today? So that should be the feeling also when a faculty ask you that I'm going to sing a song for you, you are so excited. But a faculty says that I'm going to discuss taxation provision or law provision or accounting provision. So that excitement should be there also at that time. Why it is not happening? I'm not going to sing any song. Never. No. But I'm just trying to tell you that kind of interest. You should have interest that yes, we will going to understand something new today. We will understand how to calculate tax. We are going to understand how to maintaining branch accounting or how to learn these law provision, etc. So that kind of interest you should have for your lectures also. I was just doing a prank with you. There is no song, no dance in this class, of course, because that is a class for education purpose. But I'm just trying to make you understand that the kind of excitement I have just seen when I just asked you that I'm going to sing a song, those students are frequently sending messages that yes, sir, you want to listen it. But let me tell you, student, you should have that kind of interest also for your sessions. If you can, or if you are able to create that kind of interest for your studies, nobody can stop you to becoming a chartered accountant as soon as possible. So there is no song, no dance, don't worry. So at these things, it's my first class today. Wow, in the last session you are coming to join it. So you won't be able to understand anything, Swati, because this is our last session, I believe. But it's good to see you. Hardik is asking a question. अच्छा lecture के लिए भी excited रहते हैं? Then very good. It's good to hear it. So if you are interested, as you are interested for a song, for a lecture also, definitely you are halfway through for your success. So Hardik is saying, but sir, he only received 50K and recorded it only then. How, sir, 60K can be used to calculate income from house property? Because, let me show you the question again, Hardik. He received 60,000, which is for not considering when we calculate PGBP income. But when we calculate income under income from other source, income from house property, there is no cash system of accounting applicable. For the purpose of income from house property, the rent need to be taken on even due basis. So the monthly rent was 5,000 and the received is 50,000. Suppose the received is even 10,000. It does not matter. If there is any underlies rent, then there would be information in the question. You cannot assume that it is an underlied rent would be there. He receivability is for 5,000 per month. So for the purpose of income house property, there is no cash system of accounting. We have to consider rent even if it is due, because only for income from other source and for PGBP, there is option to apply cash system of accounting or mercantile system of accounting. For other purpose, you have to consider receipt or due, whichever is earlier. So because we are considering income from house property, we have to take the rent as per 5,000 per month, that is going to be 60,000. Analyze rent, if it would be there. So there would be information in the question. You cannot assume these kind of thing yourself. Okay. Nitin Prajapati, yes, a story would be there, of course, after the class. That is for sure. Okay. Swati saying, yes, sir, I understand I'm appearing for C interview in May 2025 for the first time and wanted to understand how the classes go. Okay, most welcome. Okay. So we were on question number 7 we have discussed. Now question number 8. Now the question 8 is a kind of question in which you have to calculate total income, and that is the majority parts related to the salary topic. So in my opinion, in the examination also, the most probability for a compulsory question of calculation of tax and income would be from PGBP, or there could be salary. Because these two heads of income considering a lot of provision for the students to calculate a question in which we have to find out the total income and tax. From the following details, compute the total income. Now the information, what the question requirement has been given in the starting, that we have to compute the total income and the tax liability as well of Mr. Siddhant, age 31 year of Delhi, both as per section 15 BAC and as per regular provision of the Income Tax Act 1961 for assessment year 25-26. Advise Mr. Siddhant whether he should opt for section 115 BAC or not. So yes, we will advise Mr. Siddhant about it. So the salary has been given 4,35,000. First of all, let's go through with the question and then I will solve it on the other sheet. Bonus is going to be, of course, taxable. Salary of servant provided by the employer, is it a perquisite? It's going to be taxable. Rent paid by Siddhant for his accommodation. So that could be availed for a HRA if that has been given in the question, or if it no HRA, then we can go for section 80 double G deduction in this case. So other information, bills paid by employer for gas, electricity and water provided, again a perquisite. So that is going to be taxable. Siddhant purchased a flat in a cooperative housing society in Delhi for 4,75,000 in April 2016. Okay. Just a second. Which was financed by, let me open the query portal, I guess, to re-log in. So housing society for 4,75,000 in April 2016, which was financed by a loan from Life Insurance Corporation of India on 1,60,000 at 15% interest, his own saving of 65,000 and a deposit from a nationalized bank of 1,50,000 to whom this flat was given on a lease of 10 years. The rent payable by the bank was 3,500 rupees per month. The following information has been given for income from house property. Municipal taxes 4,300 rupees per month. House insurance 860. He earned 207,000 rupees in share speculation business and lost 4,200 in cotton speculation business. Okay, so that could be a set of losses from the same category of business. In the year 21-22, he had gifted 30,000 to his wife and 20,000 to his son, who was aged 11 years. The gifted amount were advanced to Mr. Rajesh, who was paying interest 19% per annum. Okay. So the gifted amount has been again advanced to Mr. Rajesh and he was paying 19% interest per annum to his wife and minor child. Siddhant received a gift of rupees 30,000 each from 4 friends. That would be income from other source. He contributed 50,000 to public provident fund. Okay. So on the basis of these information, we are going to solve it one by one. So salary that has been given in the question was 4,35,000. Bonus was 15,000. Then salary to the servant, that would be a non-monetary perquisite, 12,000. Gas, water, electricity bills has been paid, that is again a perquisite, 11,000. The salary would be 4,73,000. And we are solving it as per default tax regime under section 115BA. Standard deduction would be 75,000 in this case. So my salary would be 3,98,000. That could be my A. Now income from house property, the property has been let out for 3,500 rupees per month. So the rent would be 42,000, out of which we can deduct the municipal taxes as given in question 4,300. The value would be 37,700 rupees less 30% deduction for the standard deduction. That would be 11,310. My interest would be 1,60,000 at the rate of 15%. That would be 24,000 on a loan taken from Life Insurance Corporation. So my income from house property would be 2,390. Now the PGBP head says that we have a speculative business, a profit of 2,700 from one speculative business, and from the other speculative business, I am having a loss of 4,200 rupees. So the net loss after setting off the loss would be 1,500 rupees. So can we set off the loss, this speculative loss from salary head or from income from house property or not? If yes, then good. If no, then why? Dilip is saying no. Why, Dilip? Why we can not set off the loss from salary head or income from house property? Anjali is also saying no. I just want to know the reason in short why we cannot set off. What is the reason that we cannot set off it? Kambeshwari is saying no, only set off PGBP business. Okay. Arthik is saying no, sir. Carry forward as loss cannot be set off from salary because salary income does not allow it. Okay. So why can it not be set off from income from house property, Hardik? Salary is not allowing it. Okay, I got it. But can business loss could not be set off from income from house property? And if the answer is yes, then we should set off it from income from house property. Anshika is saying because specified business losses can be set off against specified only. That could be a correct answer. It is a speculation business loss. So speculation business loss cannot be set off from any other source of income, not even from business head. If there is another business, suppose under PGBP, he is also running a business of textile nature and there is a profit in textile business. Even we cannot set off the loss of speculative business because the loss of speculative business can only be set off against the same source of income. Correct. Vishmita, you are correct. So in this case, because this is a speculation business loss, so what will be there? It need to be carried forward to set off in future year against the income of speculative business only. Correct. So now the income from other source part we have to solve. It's a very interesting question regarding income from other source. So he gives loan to his wife of rupees 30,000 and he also gives loan to his minor child, that is 20,000 rupees at the rate of 19% interest he is paying. So whatever they are earning as an income is going to be clubbed in the hands of this Mr. A or whatever his name is, the assessee. So interest at the rate of 19%, that means 5,700 is going to be clubbed in the hands of on the basis of spouse income because the amount has been transferred by Mr. A or husband himself. In case of minor child, the income need to be clubbed 3,800 rupees. So the total income from these two, and there are gift also. So 30,000 has been given by 4 friends. So that means the total gift amount income from other source will be 129,500. This plus this plus this. Now calculation of GTI and tax. So my GTI would be A plus B. C is a carry forward loss, so we cannot consider it. So A, B, and D, that would be 5,29,890. Because it's a default tax regime, deductions will not be applicable. Only 3 deductions are there, but those not been applicable in this case. So my TI would be 529,890. And what is going to be my tax liability? That is, what is my tax? Chalo, calculate karo tax. Mujhe batao. What should be the tax in this case? So if we calculate tax on 5,29,890, how much it would be? I need to know the final tax liability after applying education cess, etc. After that, what would be the tax? Tambeshwar is saying 11,490. Okay. And even after applying the round off provision also. Hardik is saying 11,494 and 0 with 87A. Correct. The tax would be 11,495, but there would be rebate. I told you students, always apply this format: tax minus rebate plus surcharge. Up to 7 lakh rupees income. In case of default tax regime, up to 7 lakh rupees income, there is a rebate that could be maximum 25,000. So there would not be any tax. Because of rebate, there would not be any tax liability. Okay. Because rebate is applicable. Now that was the tax as per default tax regime. Now moving on to calculation of tax on the basis of optional tax regime. We will take the GTI 529,890. So first of all, standard deduction would be increased by 25,000 because under optional tax regime, the standard deduction is only 50,000, but we have claimed 75,000. So 25,000 we have to add it back. Clear? Now, one more thing which is very interesting and need to be kept in mind in the examination, that in case of minor child, there are exemption of section 1032, I guess, which says 1,500 rupees for each minor child or income clubbed. Whichever is lower can be claimed as exemption. So in our case, 1,500 or 1,300, whichever is lower is 1,500 rupees exemption can be claimed. But that is not allowable under default tax regime. So we did not allowed it under default tax regime, but under optional tax regime, of course, that is going to be allowed. So that is 1,500 rupees benefit would be from minor child income clubbed in the hands of parents. So after that, and there is deduction also for PPA. 80C 50,000 rupees. So my TI after applying all these provision would be 503390. Now what should be the tax? Kindly calculate the final tax liability and let me know. 13710, Hardik is saying, and of course that is the correct answer. The tax liability would be 13705. The tax would be 13178. Rebate cannot be applicable because income exceeding 5 lakh rupees. In case of normal tax regime, if income exceeding 5 lakh, there could not be rebate. Surcharge would not be applicable because it is not exceeding 50 lakh rupees. So cess would be applicable at the rate of 4%, 527. So it would be 13705, but when we will round it off, it would be 13710. That would be your final tax liability. That was question number 8. Moving on to question number 9. Let's see. Question number 9, then we have question number 10, 11, 12. So first of all, we will solve question number 9, then we will go for question number 11 and 12. Okay. So 9 again regarding the salary provision, and it says Ramdeen, age 33 year, worked as manager with Frozen Food Limited, provides the following information. Again, first of all, I need to check what is the requirement of question. So compute his total income, compute his tax for 25-26. Assume that Mr. Ramdeen has exercised option to shift out of the default tax regime. So we just need to calculate income and tax as per optional tax regime, not according to default tax regime. So now we will consider information on the basis of those which has been given in the question. So basic salary is 15,000 per month. Okay, we'll include it. Then DA is 12,000 per month. 50% of its mean for retirement benefit. So out of this 12,000, 6,000 per month is for retirement benefit. Commission on the basis of sale. The sale has been given in the question. Bonus, gratuity, own contribution to RPF, employer's contribution to RPF, interest credited to the RPF at the rate of 15%. He received gold ring worth rupees 10,000 given by employer on his 25th wedding anniversary. Music system purchased on 1st April 2024 by the company for 85,000 was given to him for personal use. Okay, that is a perquisite. 2 old light goods vehicle owned by him were leased to a transport company against the fixed charge of 6,500 rupees per month. Books of accounts are not maintained. Interest he received 5860 on bank FDR on so and so, an interest of 6786 net from the debentures of Indian company 5524. So when there is net, that means TDS has been deducted out of it. Okay. Made payment of by check of 515,370 towards premium on life insurance policy and 22,500 for mediclaim insurance policy for self and spouse. That would be part of section 80D. Investment in NSC and FDR SBI 50,000 80C deduction. Donation of 11,000 to an institution approved under section 80G and for 5,100 to Prime Minister National Relief Fund. That means 80G is applicable with the qualifying limit case and as well as the fixed case also. So of course that is a huge solution. We are having business income also over here. You can see this is going to be the business income under section 44AE presumptive taxation scheme. We are having income from other source. We are having, of course, the salary income as above. We are having deduction and 80G also there. So that will make your question solution a little more complex. But if you know the provision, if you have practiced it, definitely you are going to solve it. So we will solve it by one. The basic salary that has been given in question was 1,80,000. The dearness allowance, that is 1,44,000. Here is a suggestion for you. Always write it down, the part of that dearness allowance which is for retirement benefit. Like in this question, it was being written that 50% is for terms of employment. And that is 72,000. So that would be really easy to include this part for the calculation of gratuity purpose, HRA purpose, provident fund purpose, etc. Because it has been clearly mentioned by you out in the outer column. So you would not do the mistake that maybe you are going to include the full value, or even you are not going to include any value of DA terms. So always write it down, the amount of DA as per retirement benefit beside the amount of dearness allowance. Next is commission. This is a commission percentage based on sale. So that is now 25,000. Gratuity. The gratuity is going to be 100% taxable. Full value is going to be taxable. Can you tell me why? Why we do not need to calculate any gratuity as per the provision that amount received, statutory limit, and the formula we have like 15/26 or 1/2. Why in this question we have to tax the whole gratuity? Whether he's saying because that is during service. Absolutely correct. All the compensation like gratuity, leave encashment, pension, retirement benefit, retrenchment compensation, etc., they could claim the exemption only if you have received it after retirement. But if there is no information regarding the retirement of employee, as there is no information in this question, and if these retirement benefits has been received by the assessee, in that question, that is going to be 100% taxable. So because there is no information regarding the retirement, so we are going to tax gratuity 100% value. Clear? Now, employer's contribution. Employer's contribution in excess of 12% is going to be taxed. So the contribution has been given in the question, that is 20% of your basic salary. So employer contribute 36,000, 20% of basic salary. Now we have to find out the 12% of salary as defined. And if this contribution is in excess of that 12%, the balance is going to be taxed. For the purpose of 12%, we have to take the basic salary plus DA that part which is for retirement benefits, and if the percentage commission on sale. So in the above information, you can see we need to take the 1,80,000, then 72,000, and then 25,000. So the 12% of these three elements would be 33,240. And of course, which is less than the contribution. So the difference of this contribution, which is technically exceeding 12%, is going to be taxable as 2,760. Now the interest on provident fund up to 9.5%, it is free, but if it is exceeding 9.5%, that is going to be taxable. So interest component has been given in question 15,000. Which is equivalent to 15%. The rate has been given in question. Whatever is the excess part over 9.5% is going to be a taxable perquisite. So over and above 9.5%, that is 5.5%, and that would be 5,500, which is going to be taxable over here. A gold ring has been received from employer, so up to 5,000 rupees non-monetary gifts are exempted, but if it is exceeding, so we have two options. Either we can consider the whole value or we can consider excess value 5,000 also. So you can apply any of the assumption and you have to write it down. So we are considering full 10,000 rupees value as a perquisite. Then music system you receive for personal use. That will fall in the category of other asset. So if that was a car, the rate is 20%, it's computer, the rate is 50%, other cases, the rate is different. So the rate is now 10%, and the value has been given 85,000. So the 10% would be taxable as a per case at 8,500 rupees. The total of salary, gross salary is 455,760. Deduction standard is only 50,000. So this net would be 405,760. Clear? So that was a salary income. We can so that is as A point. Clear? Now PGBP to light motor vehicle, and that is going to be taxed as section 44 AE, and the amount is taxability is 7,500 rupees per month per vehicle. So we are having two vehicles. So that would be taxable value 1,80,000. That is my PGBP income, B part. Then we are having income from other source, in which we are having income of interest 5,860, and one more income, that is net after TDS 6,786 after deduction of 10% TDS. So this is equivalent to 90, and my total income for this would be 7,540. So that is 13,400 is income from other source. So my GTI would be, in this case, 599,160. Now there are multiple deduction in this case. 80C deduction, 15,370. We have NSC purchase also fall under 80C, that would be 30,000. FDR, 5 years FDR for tax benefit purpose, that is again 50,000. Employees contribution, which has been mentioned under salary provision, employees contribution also eligible for 80C deduction, which would be 30,000 in this case. 80D, that is for insurance premium deduction for medical insurance, 22,500. Now the 80G is there. Now for the purpose of 80G, what we have to do, there are two 80G calculation. One is for Prime Minister National Relief Fund. For the Prime Minister National Relief Fund, question number 9 we are discussing. That is 5,100. So Prime Minister National Relief Fund is 100% allowed as deduction without any qualifying limit. So deduction from this value would be 5,100. But the second payment has been made, 11,000 rupees, which fall under 50% of qualifying limit. Now we have to calculate the qualifying limit, which says the actual amount donated, which is 11,000. You have to compare between two amounts, actual amount donated or 10% of adjusted GTI. We need to calculate. Whichever is lower would be your qualifying limit. And for that amount, we can claim 50% out of it. Now for adjusted GTI, the provision says out of GTI, deduct all other deduction. So our GTI was 599,160. So reduced all other deduction. And if there is any question, if there is any short-term cap gain 111A, long-term 112A, or long-term 112, etc., we need to deduct those also. In this question, there is no capital gain, but we need to deduct all other deduction except 80G. So other deduction value is 147870. And after that, the amount would be 451290. 10% of this would be 45129. So out of 11,000 or 45,129, the lower would be 11,000. So out of this 11,000, 50% you can claim as a deduction. That would be 5,500. So deduction of section 80G would be total. What we can claim is 10,600 rupees. After reducing this, all these deduction, our TI would be 440690. So now we have to calculate tax. So let me tell, I'm asking all of you, what should be the final tax liability in this case? What is the final tax liability in this case? Let's see who is able to give the correct answer. Kasak is saying nil, rebate applicable, very well done. Whether is saying nil. Because income is up to 5 lakh rupees, so if you will calculate tax, then of course there would be no tax liability. But if it is that simple, am I going to ask you the question like this? So there must be something else. So there is something else. That's why I am asking this question, that calculate tax on this income. So please revise again and then let me know what should be the final tax liability. If the answer would be nil, I'm not going to ask you because the question is so simple. So the answer is not nil. At least the answer is not nil. The tax liability answer would not be nil. Answer is something else. So you have to calculate it. Any guesses? Hardik has given the answer. Hardik, your answer is not absolutely correct. There is some mistake. Kindly rectify it. Gurminder Kaur is saying 754. Nitin is saying 7316. Veda is saying 4180. Okay. Because the tax liability would be nil. That is for sure. Because up to, if you calculate the tax on it, the rebate will set off it and tax would be nil. But there is TDS also which has been deducted from my income. And that was 754 rupees. TDS has been deducted. In income for other case, income from other sources, we calculate this 7540. So that means TDS has been deducted. So that would be 10% of this. So my refund would be 754, but we have to give the answer in the multiple of 10 rupees. So the correct refund would be 750. Now this is the correct answer. 750 would be the correct answer. Okay. So that was question number 9, what we have discussed. Now moving on to question number 12 first, because there is an error what we need to rectify also. So if we have left time after question number 12, then we will solve question number 11 also. Now question number 12 is saying, Mr. X, an individual, set up a unit in a special economic zone in the financial year 1920. Now the special economic zone question is here. We did not solve a question in which AMT is also applicable yet. In this question, we will also solve that part of AMT would also be there, etc. So Mr. X, an individual, set up a unit in special economic zone in the financial year 1920 for production of washing machine. Why 1920 is relevant? Because for first 5 years, we can claim 100% deduction under section 10AA. You must have remembered that. And for next 5 years, you can claim 50%. So in our question, we are falling in this category of section 10AA. For production of washing machine, the unit fulfill all the condition of section 10AA. Question itself announcing that Here are the provision of section 10AA are applicable. Okay. During the financial year 23-24, he has also set up a warehousing facility in a district of Tamil Nadu for storage of agricultural produce. It fulfills all the condition of section 35AD. So look, the question itself announcing that section 35AD provisions also applicable. Capital expenditure in respect of warehouse amounted to 75 lakh, including cost of land 10 lakh. The warehouse became operational with effect from 1st April 2024 and expenditure of 75 lakh was capitalized in the books of that date. Okay. Now the information for section 10AA, the profit from unit operating in SEZ, export turnover, domestic sale, profit from operation of warehousing facility before considering deduction is this much. Now the question itself is saying that calculate income tax, including AMT under section 115 JC, liability of Mr. X for assessment year 25-26, both as per 115 BAC and as per regular provisions of income tax. Advise Mr. X whether he should pay tax under default tax regime or as per normal provision of the act. So here is the question. Okay, who will tell me? Under section 115 BAC, under section 15 BAC, which deduction is not allowed? Under section 10AA benefit is not allowed, or section 35 AD benefit is not allowed, which is not allowed under section 15 BAC provisions. Kasak is saying 10AA. Nayan Patel is saying 35 AD. Okay. Nitin is saying 10AA. Okay. More. Hardik is saying 10AA. Kasak is saying both not allowed. Achha. More answers. I am waiting. Approve saying not allowed. Okay. Approve. Abhishek Mishra is saying 10AA. Ambeshwari is saying 10AA. Pallavi is saying both. Dilip is saying both. Harshri is saying both. The correct answer is, of course, both. Not disallowed, not even disallowed. When I ask that which is not allowed, so the correct answer could be both also. But our brain asks us that if somebody is asking this is allowed or this is allowed. So the instinct says that, okay, one of them should be allowed. So we feel that both must be not allowed, but still our brain asks us to please answer only one. And the correct answer is both not allowed under section 115 BAC provision. So now we need to solve this question. We have gone through with the question and now we will solve it on a separate sheet. So question number 12 is here. First of all, we are solving it as per the default tax regime and the provision. Profit from special economic zone. It's 40 lakh rupees has been given in the question. 10AA, of course, deduction not applicable because we are under section 115 BAC. Now, profit from section 35 AD business has been given in question 1 crore 5 lakh rupees. So 35 AD deduction is not allowed, but we can claim the depreciation on the value of building. Out of that 75 lakh rupees, 10 lakh is the land value. So on 65 lakh rupees is the building value on which we can claim depreciation at the rate of 10%. So that would be 6,50,000 out of this profit, remaining profit would be 98 lakh 50,000. Now total income would be 1385000. 1385000. The tax would be 3845000. Surcharge rate would be 15% because my income is more than 1 crore but up to 2 crore rupees. So surcharge would be 576750. So that would be 4421750. Now 4% cess would be there, 176870. So that would be 4598620. So tax one would be 45,98,620. Now we are going for optional tax regime. As per the normal provision of tax, we have to calculate tax once as per optional tax regime. And in this scenario, my profit from SEZ, that is 40 lakh. But now I am eligible to claim deduction under section 10AA, which say the amount of profit into ET, which is export turnover upon TT, which would be 100. 80 is export, 20 is domestic. So my total turnover would be 100 and 50% of that we can claim deduction because 5 year has been passed away. So my deduction would be 16 lakh rupees out of this 40 lakhs. So that would be 24 lakh. Now this is section 35 AD business. My profit has been given 1 crore 5 lakh rupees. Now 35 AD says that you can claim the deduction of the whole amount of building if the amount has been capitalized in the books of accounts. And the question says, yes, the amount has been capitalized. So 65 lakh rupees we can claim as a deduction, complete deduction, and it would remain only 40 lakh rupees my profit. So after that, my total income would be 64 lakh. Now 10% surcharge need to be applicable. That would be 6 lakh 40,000. The total would be 70 lakh 40,000. And the cess of 4% also going to be applicable. That would be 281,600. So total tax would be 732,1600. Now the second error in the study material is this, that they did not apply surcharge in the solution, which is a technical error, printing error. It could be possible. So I have also informed the BOS, so they will update the study material. So you can see on question number 12 solutions. So you will not be confused. So that's why I'm telling you, you have to make the correction in the solution of question number 12. The surcharge need to be there, which has not been applied in this question. So this is question number 12. And here's the solution. You can see the income is 64 lakh rupees. The tax would be correct, 7,32,500. The tax upon this, okay, I did not calculate the tax. I just total income I consider as a tax. Just a second, let me recorrect it. We have to calculate the tax on 64 lakh. So tax calculation is exactly correct. There is no problem in tax calculation. That would be 1,732,500. Now surcharge would be 10% on it. That would be 173,250. So total tax after surcharge would be 1905750, and now the cess upon this would be 76230. So after surcharge and cess, tax liability would be 1981980. So surcharge we need to apply in this case 10%. Correct? So tax would be this much, 1981980. Now we have to apply the AMT provision. Why AMT provision is there? Because total income exceeding 64 lakhs. So for that purpose, for the purpose of applicability, we have to find it out the ATI. For this purpose, we have to take the TI, that is 64 lakh. Now we have to add back section 10 AA deduction in this case. That would be 1600000, and 35 AD deduction also we need to add it back. That would be 65 lakh. But we can claim the depreciation because deduction is not allowed, but depreciation we can claim, that would be 6,50,000. So after that, our ATI would be 1385000, that is exceeding 20 lakh rupees. So AMT is applicable at the rate of 18.5% tax, that would be 2562250. And we have to apply the surcharge also as per the surcharge provision in this case. So surcharge would be 15%, that would be 384338. Surcharge, after surcharge, the value would be 2946588. 4% cess would be there, 117863. So that would be 3064451, and it would be rounded off to 3064450. Now we have to compare the tax of this and the AMT tax, whichever is higher. So this is higher, 30,64,450, and this tax and AMT tax, whichever is lower, is going to be my final tax liability. 3064450 would be the final tax liability, and in this case my total income would be called 1385000. We can have the AMT credit also in this case. The AMT credit would be 3064450 minus 1981980. The balance would be my AMT credit that could be utilized in future next 15 years. In the year in which normal tax liability would be higher than your AMT tax, the difference could be utilized as AMT credit. Pallavi is saying deduction section 10 AA should be 32 lakh under normal provision. Pallavi, it would not be 32 lakh because the business has been established in 1920. We have discussed in this question. So 5 year must have been over in 2023. So we are running in the next 5 year part for which the provision is 50%. So deduction would be 50% of the amount which is eligible for deduction. Okay. When Patil is asking, means AMT credit we use as like TDS and TCS, right, sir? We can use it as a TCS, TDS, but in the year in which your normal tax liability is higher than AMT. So that part has been discussed in the last session. So if you have any confusion about to the utilization of AMT credit, so you can see the last session, that would give you the clarity. surcharge given in new study material, it's very good if it is there. There is no problem. But if you have downloaded the study material like some days before, like 15, 20 days or 1 month before, as I have downloaded, so if there is no surcharge in that, that you can add that surcharge value in that study material. Okay. So that was question number 12. So if you have any query, students, you can ask, because we are going to end our last session of today after your queries, etc. My advice to all of you is, please revise the provision. Revise the provision, theoretical as well as numerical. So if you are able to revise the provisions twice or thrice, that will really going to help in examination. That will give you a confidence also. And it's a request also, please solve the MTP, RTP and the previous year question papers. That will definitely give you a lot of knowledge, a kind of queries, a kind of problem that could be arise in the examination. So that is really, really important to solve all your MTP, RTP, and at least last 5 attempts question papers. That will definitely going to help you in the examination also. And when you solve those MTP, RTP, kindly do that on a time management basis. Look, it is easy to solve the examination paper in 6 hours. But the problem that you have to solve that question paper in 3 hours. So time management is very, very important. It's a very important thing for solving question. In my opinion, if there's a class of 50 students and the question paper is there, and if you are allowed to solve within 6 hours, almost 70 or 80 or 85% student can solve it in the same way. But when there is a time crunch that you have to solve that paper in 3 hours, then problem arises. In that case, in that nervousness, due to non-time management, you might be able to solve questions wrongly. You might not going to solve some provision which has been given in the question because of that nervousness, etc. So time management is very, very crucial for the purpose of examination. There might be revision class also. So if the revision class has been held before your examination, I will definitely going to solve the previous year questions and MTP questions and RTP questions also. So here a small story for all of you. Kasak is asking, sir, can you tell most important chapter that are must for exam? All chapters are important. I've seen this thing. If I'll say that, okay, basic concept provisions are not that important, or chalo fine, leave the residential status provision, that is very dangerous. Even there are cases in which residential status has been asked in examination for 8 or 12 marks. So what happen if you will, out of 50 marks question paper, 8 or 12 marks could be belong to a residential status topic. So there could be a question from agricultural income. So there is nothing we can say that is not much important. Everything is important for your examination. Everything. Okay. So please remember, do not leave any topic. We are doing chartered accountancy course. We are not doing any BCom or BA. It's not BA, it's CA. So everything is important. Sabko three times revise kar lo. At least 3 times with numerical also. So if you are able to do that thing, I make you sure that definitely you are going to clear your examination easily, whether it's your intermediate level or it's your final level. 3 time revisions is more than enough. It would be give you a lot of confidence, and time management is very, very important. You might seen there are student who is more intelligent than you, that they might not be able to crack the foundation examination because of that time management nervousness. So intelligence is something else, but I always believe in work hard. So if you're able to do work hard with proper strategy, planning, etc., so nobody can stop you. So very simple story for all of you. There's a story that is called Theory of Pluto. You must have heard that, I guess. So earlier there was 9 planets in our solar system, and Pluto was the farthest out of these planets. So हुआ क्या कि कुछ years पहले साइंटिस्ट ने डिसाइड किया कि प्लूटो का जो ऑर्बिट है वो हमारे प्लैनेट सोलर सिस्टम के ऑर्बिट से बाहर हो गया. इट्स स्टिल टेक राउंड ऑफ सन, बट उसका जो ऑर्बिट हमने डिसाइड करा है सोलर सिस्टम का, प्लूटोस ऑर्बिट से बाहर चला गया. तो डिसाइड हुआ कि अब 8 planets हैं और प्लूटो को डॉग प्लैनेट माना जाएगा. इट इज नॉट द पार्ट ऑफ आवर सोलर सिस्टम. बट व्हाट हैपेंड, प्लूटो को इससे कोई फर्क नहीं पड़ा. प्लूटो इज स्टिल डूइंग व्हाट ही वाज डूइंग अर्लियर. सो व्हाट इट वाज डूइंग अर्लियर वो अभी भी वही कर रहा है जो उसका काम था. इट डज नॉट अफेक्टेड कि आप उससे इतने लाखों करोड़ों किलोमीटर दूर, कुछ लोग अर्थ पर डिसाइड कर रहे हैं कि अब नाउ प्लूटो को हम अपना प्लेनेट नहीं मानेंगे. हाउ डज इट मैटर? क्या उस बात से प्लूटो ने अपना काम करना बंद करा? नहीं. आपकी लाइफ में भी ऐसे लोग होंगे जो ये मानते होंगे कि आपसे सीए नहीं होगा, आपके बस का नहीं है, इट्स नॉट पॉसिबल. तो जस्ट इग्नोर दैम. अपना काम करो प्रॉपर डेडिकेशन से, अपने पूरे हार्ड वर्क से, एंड नोबडी कैन स्टॉप यू. एक बड़ी इंटरेस्टिंग सी बात है, एक रियल फैक्ट है कि जो एलिफेंट होता है जब वो छोटा होता है, बेबी साइज का, तो वो यहाँ वहां ना चला जाए तो जो उसका ओनर होते हैं वो उसके पैर में एक रस्सी बांध देते हैं जिससे वो यहाँ वहां ना जा पाए. अब वो स्टार्टिंग में कोशिश करता है जाने की, तो बार बार रस्सी को तोड़ने की कोशिश करता है, बट ही इज नॉट दैट स्ट्रॉन्ग एट दैट पॉइंट ऑफ टाइम. तो वो उस रोप को नहीं तोड़ पाता, और करते करते कोशिश उसके पैर में चोट लगना शुरू हो जाती है. तो उसे अब डर लगता है कि मैंने दोबारा किया तो पैर में चोट लगेगी. तो बाय 5 10 15 ईयर्स होता क्या है कि वो उस रोप को बार बार इतनी बार कोशिश कर चुका होता है कि उसके दिमाग में फियर हो जाता है कि आई कैन नॉट ब्रेक दिस रोप एंड वेन एवर आई डू इट, इससे मुझे चोट लग जाती है. और होता क्या है जब वो बड़ा हो जाता है, मतलब अब वो इतना पावरफुल है कि अगर वो ट्राई करेगा तो वो उस रोप को तोड़ सकता है. लेकिन वो बचपन से उसके दिमाग में है कि आई कैन नॉट डू दिस थिंग, बिकॉज उसको ऐसा लगता है कि ऐसा करने पर मेरे को लगेगी और मैं ये कर ही नहीं सकता. उसका ब्रेन उसे ऐसे बताता है कि ये दिस इज समथिंग यू कैन नॉट डू. तो वो होता क्या है, वो जब इतना पावरफुल हो जाता है कि वो उसे इजिली तोड़ भी सकता है, बट वो उसे कभी ट्राई नहीं करता बिकॉज उसको ऐसा लगता है कि ये होगा ही नहीं. तो इसीलिए जस्ट बी कॉन्फिडेंट अपॉन योर सेल्फ. लोग आपको क्या कहते हैं, अपनी पावर को अंडर एस्टिमेट मत करो. यू हैव अ ब्रेन, वेरी पावरफुल ब्रेन, एंड दैट कैन डू वंडर्स. तो अच्छी तरह बस पढ़ते रहो. और एक छोटी सी पोयम है आप लोगों के लिए. व्हेन आई वाज डूइंग सीए, तो मैं इस चीज को हमेशा बोलता था जब मुझे लगता था कि आई एम वेरी डिप्रेस्ड और मुझे बहुत मुश्किल हो रही है पढ़ाई करना, और ये पढ़ाई कब खत्म होगी. इट्स लाइक ईयर्स आर गोइंग इन दिस प्रोसेस, बचपन से ही पढ़ रहे हैं हम लोग. तो मैं इस पोएम को हमेशा बोलता था. और ये पोएम मैंने 2021 में जब बीयूएस ज्वाइन किया तो अपने स्टूडेंट के साथ शेयर भी किया था. उससे पहले मैंने अपने लाइव क्लासेस में कभी शेयर भी नहीं किया. बहुत सिंपल सी पोएम है, एंड माइट बी विल आल्सो हेल्प यू. एंड इट सेज, इस दिल की धड़कन कहती है उम्मीद अभी भी बाकी है. ये रात कभी तो गुजरेगी, वो सुबह कभी तो आएगी. एक दिन ऐसा भी आएगा, एग्जाम का टेंशन उड़ जाएगा. और एक दिन ऐसा ही आएगा, मेरे नाम में सीए जुड़ जाएगा. तो जब भी आपको लगे बहुत डिप्रेशन है, सो प्लीज कोशिश करो इस पोएम को बोलने की. यू विल फील अ सर्टेन काइंड ऑफ पावर एंड होप इन योरसेल्फ. तो एक दिन ऐसा ही आएगा, अपने नाम में सीए जुड़ जाएगा. So it will work for all of you. All the best for your examination, and I hope we will see each other somewhere someday. So if there is any query, you can ask me, students. Otherwise, we are going to close this session now. All the best to all of you. Nitin, Rashmilata, Vijay, Shibu, Bhumika, Vishmita, Vaidehi, Kasak, Hardik, Gurminder, Apur, all of you. We all are family. We are going to be a part of a fraternity. So please be a chartered accountant as soon as possible. So Mr. Bhargav, can we close the session?